What's going on, guys? Welcome back to another video. In today's video we're going to talk about AMC, GME as well as the broader market. So today AMC was down for 6.55% for the day. It had a high of $15.79. The average volume on AMC is around 49.61 million, but today's volume was around 26.93 million. Like I mentioned in my yesterday's video, that I can see it very clearly, the volume was not significant enough. Even after there was an upward momentum that was coming into the overall broader market yesterday, AMC is not going to have any kind of a upward momentum coming into the stock. But like I said, the SPY and the overall broader market goes up, so does the AMC and GME. But today exactly the opposite happened. The overall market almost crashed today. Now let's come over to the GME. GME was also down for 6.26% for the day. It had a high of $124.68. The average volume on GME is around 4.19 million, but today's volume was around 1.75 million. So the volume is almost the same in AMC and GME according to the everyday volume. Now, until unless there is some sort of a news coming out of both of these companies, there will be no upward momentum coming into these two stocks. And especially when there is a overall downtrend in the overall broader market, AMC and GME are the stock which are going to get affected the most towards the downtrend. Now let's come over to the SPY. Interestingly, SPY was down for 3.55% for the day. I mean, the kind of swings that are coming in the overall broader market, this is just out of control. It had a high of $425. It almost ended up around $409.44. The kind of these weird and wild swings that are coming in the overall broader market, a lot of people are actually losing money in it, because as soon as there was an upward momentum into the SPY yesterday, I'm pretty sure there were a lot of individual investors, those who were holding call options on many other stocks as well as the SPY. But rather than keep going up, significant downtrend that affected the overall broader market, and majority of the stock got beaten down. I'm pretty sure people were holding a lot of call option on Tesla, Nvidia, and many other big names which might have some sort of upward momentum. But exactly the opposite happened today. Overall market had a very big sell off today, and this sell off might continue for another few days until and unless the market maker decide that they want to stabilize the market or they want to keep bringing it down. The 50 basis point that we experienced yesterday, it happened after 22 years. So that was a very big news that came out yesterday, but the overall market went up because the 50 basis point was already priced in. But today, this morning, we had a pretty significant downtrend coming into the overall broader market. We really don't know that this downtrend might keep on continuing for a few more days. Now let's come over to the option flow for the AMC. Now I have increased the premium to max and see what exactly the whales are doing. So today we had this whale coming in and he's betting $6.6 million on it, and he's buying 1,650 contract. This is a $50 put option that he's buying. It's going to expire in 259 days. Now why these investors are betting a big amount of money towards the downside of the AMC? Just because that every time there is a big significant downturn in the overall broader market, AMC and GME are the one those who are gonna get affected the most. And there were these $130 put option that were coming in as well with the same expiration, and they were also betting a huge amount of money, $1.57 million, $1.35 million, $1.81 million, $1.11 million. So this is the kind of money which indicates that there will be a significant downturn coming into AMC. Now when I bring down the premium and see what exactly the retail is doing, I can see very clearly these $130 put option that came in with the same expiration. That is not suspicious. It's pretty significant that the AMC is going down from here onwards. The kind of option buying that was happening throughout the day, it is just next level. Now when we have a look at the put to call ratio, you can see yourself 6.7% is just the call side, and the majority is 93.3% on the put side. So everybody is betting that the AMC is going to go down. Now what the market maker do in this kind of situation, they sell put options and they let the stock go up. That's what actually happens every time there is a imbalance in the put to call ratio. This is a total imbalance that we are experiencing in the put to call ratio. The call side is very minimum and the put side is very heavy. So what does that mean is we might experience some sort of upward momentum. That's what usually happens. I've seen this thing for many years, that every time there is an imbalance in the put to call ratio, if the one side is bending too much or it's too much oversold, then the market maker usually let the stock run so that these puts go out of the money, and they're going to sell some put option themselves so that they can collect some premium on it. But right now the current situation of the overall broader market doesn't seem to be all right. Now let's come over to the option flow for the GME. Now I have increased the premium to max and see exactly what the whales are doing. All the whales are on the downside and they're buying huge amount of contracts, and they're spending a huge amount of money as well in betting that the GM is going to go down from here onwards. These were $95 put option that came in that's going to expire in another 42 days. Now when I bring down the premium and see what exactly the retail is doing, majority of the retail again are onto the downside. You can see it for yourself. These $95 put option that came in a line, it's the same expiration, same strike price, and they are all betting that the GME is going to go down from here onwards. Now let's come over to the SPY. Now I've increased the premium to max and see what exactly the whales are doing. This whale that came in, and he's buying 5,000 contracts. He's paying $18.4 million for it. There was another one. There was this 4,000 contracts, and he's paying $12.5 million for it, and it's a $410 put option. This can expire in 259 days, and they are all betting that the SPY is going to keep going down from here onwards. Now when I bring down the premium and see exactly what the mini whales are doing, when I look at the put to call ratio, we can see it for yourself. This only 29.7% on the call side, 70.3% on the put side. The premium is very heavy on the put side, and the volume on the put side is very strong. It's 64.3%. Now, when I look at the options flow, there was nothing majorly suspicious coming out of the options flow, but there were few call options that I saw were coming in, which were betting that the SPY is going to go up from here onwards. Now, buying call option in this kind of a market, it makes no sense at all, especially after experiencing a extreme level of uptrend after the Fed announcement of 50 basis point, and then the following day we are having a sell off, and now there were a lot of call option that was coming in with a huge money and a good amount of contracts. As we can see in the options flow, these 10,000 contracts that we see over here, these are $1.1 million that this individual is paying. He's buying $450 call option, so it expire in 35 days. The amount of contract this individual is buying, we don't see that kind of a contract buying happening into any puts. Was the only one which was to the upside. We never know what's going to happen if we're going to reach $450 call option or not, but there might be some sort of confirmation regarding something that is about to happen, or these market makers are just playing this game from back and forth. The rest, there was nothing majorly suspicious coming out of the options flow for the SPY. Hope so you like my video. Please like and subscribe my channel, and I'm going to see you in the next one. Cheers.